just to give an information about the exam, the way I have discussed here, not the exam is not going to be like this. So the book has adjusted to match with the current exam style. So we will discuss like that. So if you see, this is the profit and loss account of a limited liability company. What you will show, it is here. See here you have starting with revenue, cost of sales, other income, distribution, and remember, for all of these we may need additional notes. Now cost of sales, what is the equation? Anyone can tell me?
Opening stock plus
Opening stock plus purchases minus closing stock. So that we have to do it separately somewhere else. And the answer only you bring it here. Like that, the administration expense is not one. Rent, salary, too many. So you do it in a separate note, and the final answer you bring it here. Like that. That's all I just want to emphasize. So anyway, this is the profit for the year, and then you have the balance sheet for the statement of financial position. You have property, plant and equipment, IAS 16, intangible asset, IAS 38, then inventories, IAS 2. We have studied all. Then we have trade receivables, other current assets, cash and cash equivalents. That is IAS 7, which we will study later.
IAS 7 no,
We still not study. We will
IAS
study later.
37 provision for contingencies.
Yeah. So then we have share capital, you see share premium, that we discussed. And then return earnings. That is, return earnings is actually this one. Yeah. And then you have liabilities, non-current liability, long-term borrowings, like loan, leases, debentures, long-term provisions. Sometimes you will have provision which is long-term. And then current liabilities, trade payable, short-term borrowing, tax, and then other short-term provisions.
So the sole trader to this one is little bit company account is
Exactly.
little bit changes.
And types of share capital, you have authorized share capital, I explained you already. So what is authorized share capital? The maximum number of shares the company may issue. Issued share capital, the number of shares actually the company issued to shareholders. And then you have called up share capital, meaning, let's say, I will give an example here. Total share capital 10 million. Issued share capital 5 million. You issued 5 million. So you have a provision of issuing another 5 million. You issued to shareholders 5 million, but now you are asking money for 3 million. So can I ask you a question? How much?
2 million.
2 million. Paid up share capital. Now called up how much? 3 million. So I requested shareholders to pay me 3 million share capital, but the shareholders paid me only up to how much?
3 million.
No. From the called up, paid up is only 2 million. So then you may also have something called
Make my
you
sense.
didn't understand.
I am as a company.
Yeah.
Okay, I can issue 10 million.
10 million. Okay, Kala.
Okay.
No, you are not issuing. You have the right to issue 10 million.
10 million. I now only issue 5 million.
Kalas.
Okay.
Then you issue 5 million. Then you issue meaning you issuing your official document to all the shareholders.
Okay.
Then every shareholder now become 5 million shareholders, not 10 million. Shareholders are 5 million. But now you need money. You ask money for 3 million. Shareholders, please pay us this much money. So this will go in steps, like that I showed you there.
Yes.
Then from 3 million, since you called up 3 million, uncalled up will be 2 million. So one equation closed. Then you come from 3 million, you called up shareholders. So far they paid 2 million. So paid up. Clear? Bahar, any problem?
Just this thing, 1 million.
Meaning 3 million I asked from everybody, pay me money. Only 2 million shareholders paid.
Balance. Balance. But 1 million. 1 million.
Yeah, that's the balance. Habibi, I asked this much money. People paid me
2.
Two.
Balance 1.
and then we have types of shares. Equity, actually, shares are 2 types. Ordinary shares and preference shares. In the house, I'm talking about 20 years or 30 years before, in our houses, family, father, mother and children. Who is cooking meal usually? Not father, mother. Mother cooking the meal and then she arranges everyone to have the meal. Usually who is eating the meal last? One advantage and disadvantage to mother, let's say leave the pot. And then father, always father will eat first. That's the those days culture. Father should eat first. Then only the children given. Otherwise a big problem at home. I know one of my relative family, actually my mother's elder sister's husband. He is a businessman in electrical items. He's a very adamant guy. All these 3-time meal, if anyone else served, and if we get to know that served before him, he will take the plate and he will break it to pieces. You get that much anyway. So he should be served first. But in the meantime, he is a very kind man also. He will make sure others eating, too much eating, everything is there. But the respect must come to him first. So, anyway, father will eat, then the children will eat, then the remainder is coming. Now, sometimes, remainder will be like this. In some situation, remainder will be like this. Now, mother has to eat what is left over. So, in a company, when you talk about actually the types of shares, there are 2 types of shares. One is ordinary shares, other one is preference shares. These people are who take risk. Mistakes. When you start the business, you have to entertain the result of the business after making sure all others' rights have been paid. Employees, government, creditors, other stakeholders, auditors, bankers, you pay everybody at the end. What is left over, only you take it. This you call it residue. What is remaining? If the business is very good, this will be big. If the business is very bad, this will be smaller. So at home, after dinner, usually lunch is okay. Sometimes lunch what happens is they make something more for the dinner. But the dinner, they are just to survive with what is left over and then they make a small portion. So sometimes mother will have to sleep without eating. But sometimes, some house mothers you will see very huge and fat and big. Because they ate a lot in the dinner and not to throw. So the ordinary shareholders are same like mothers at home. So they will share only the what is left over in the company. Whereas preference shareholders like fathers. I am coming at 9, 10, 11, 12, no matter, my 2 plates of meal should be there. Correct? Anytime a father comes to home, the first question either mother or daughter is asking, shall I arrange the meal? Same story with the preference shareholders. These preference shareholders are, who are these people? In a company, you coming up with a new project. I need $10 million. But it is not fair, not practical to issue ordinary shares now. We need money in quick sense. So you go for this type of issue of shares. You say that, brothers, we will give you fixed return. 7% kalas. Same like interest. We will give you fixed return, and at the end of the project we will give you the money back. So he comes home, he knows that his 2 plates of food is always there. No matter whether they half plate or white plate, his 2 plates of meals must be there. Same story with the preference shareholders who are risk neutral. And so, equity shareholders, they are the owners, the real owners of the company. Who are these people? Ordinary shareholders. They are fixed rate of dividends. The word dividends given to shareholders return. Interest is a word given to people who give loan. People who invest, they get dividends. People who lend money, they get interest. So, ordinary shares effectively owned by business. They are the owners of the business. Whereas, receive dividend in priority to ordinary shareholders. Like the example I gave you, father and mother. Usually have voting rights. These ordinary shareholders only have the voting rights. They are the decision makers at home. We go to Lulu or we go to Villaggio is decided not by the father, by the mother. So no. Based on your family in Doha, who decided to go which mall? Correct, no? So the voting rights are with ordinary shareholders. Whereas on winding up, receive capital in priority. That's correct. Now, no right to a fixed dividend. Now, the ordinary shareholders cannot ask for 10%, 20%, no. Whatever left over, you get it. But sometimes if you are doing the business good, that will be fatty dividend, you will get it. Whereas, can be redeemable at a certain date or sometimes irredeemable. Now, this actually, can we try this question? This one. I discussed that previously. I think you brought the calculator or no? Yesterday we went and purchased calculator. Capital investment. That's the area. No, sir, you also brought a calculator. Well, I use the calculator. I'll go.
The problem for me, not understand. This is the problem.
Intermediate calculator. What do you think these boxes are for?
Debit credit.
No, debit credit no
Amount.
there. What do you think? The how much is what?
Share capital, cash and the sum. According to the calculation.
You have to show the here you have to show the calculation.
Ah.
Huh?
200,000.
Just like you know multiplication or whatever. How you write that number here? You going to write a number here now.
Yeah.
You need to write a number there. So with this information, how you going to calculate? What's the answer? Can I see? Where is this number? Into yes, 230. Well, I didn't understand. 200,000. Okay, now what do you do? Divide by what? Yeah. No meaning in that calculation. Meaning.
This share capital.
Share capital as the Russell mark.
What is this one?
Now, if you remember, in one example I discussed, I said that you have share capital and share premium. And here the company issued shares at with par or with premium.
With premium.
How much is the premium?
0.3.
0.3. And how much is the par value of one share?
0.5.
0.5. So what is the total number of shares?
200,000.
So how much will be the share capital?
100,000.
How you get it?
So 200 into 0.5.
200 into 0.5. Why do you need to divide? No need to? Understood? So, total cash. How much total cash I would have received?
160.
200,000 into 0.8. This is what you need to show in that box. So that will be 200,000 into 0.8 is 160,000. Possible? And this 160 where will you show? 160 you write here.
Cash.
Now we have two boxes there. So share capital will be 200,000 into 0.5 and here credit. How much?
100.3. 100 double.
No. There are 200,000 into 0.5 and here 100,000. Second box 200,000 into 0.3 and here
60.
like this. 200,000. Now see this 0.8 we have 0.5 and 0.3. 0.5 is share capital and 0.3 is share premium.
How much is going to 5 and going to 3?
Well, I mean mistake over there. 1 June 2016, a WAB company issued a further 200,000 ordinary shares of 50 cents. That's 50 cents of 50 cents. Then you should understand this is the par value. And each for the worth of the share 50, but you are selling at 8. So you making a difference of 30. That 30 is known as premium.
Can you do it by taking the difference also?
Hmm?
Can you do it by taking the difference?
What do you mean by that? I didn't understand.
Now, it's 160,000, right?
Yes.
We know that the share capital is 100,000.
Yes.
So if you take the difference,
Yeah, that's good. So, you understood the Baha or not?
Miss, what can I say?
You understood this calculation?
This cash,
Yeah.
how much it will come?
So, now they gave you 0.5. The question was that. This is share capital. So 0.5.
Share capital?
Hmm.
Share capital.
Hmm. So that is 100,000. Then 200,000 into 0.3, that is 60,000. Now, this is the equity part of the balance sheet. The equity part of the balance sheet, how much you will write here? 100,000. And then share premium?
60,000.
So the total of these two?
160,000.
Again, this one,
Now, you answered this question. That's a double entry. Now this is presentation in the balance sheet. So there are, equity means capital. Capital has two items, share capital and share premium. Share capital is that 100,000. See, 50 cents, ordinary shares, how many shares you will write here?
200,000.
200,000. Ordinary shares, so 100,000 will come. Share premium, 60,000.
first one cash 200 into 8.
0.8.
Second,
In 200,000 into 0.5.
plus 3.3.
Exactly.
And the last one into
This is the answer from this answer. We have to show as a presentation. How you going to put it in your financial statement. So 50 cents into 200,000 will be 100,000. Share premium is straight away 60,000. Can I move to the next one? When you talk about issue of shares, there are various different types of issue of shares. One is fresh issue. Meaning is simple. You are issuing shares for cash. Issuing shares for cash to outside shop, like what we did in this example. Here, like this example. This is fresh issue. Second one, you don't take cash, but you give shares. Then to whom you will give this? Outside you will give this? Only to existing shop. Now, then we need to think about the double entry now. Remember that in bonus issue, do we get any cash receiving or any other net increase or decrease in the resources? No. So the net resources before, or I will also say net wealth before bonus issue will be equal to net resources or net wealth after bonus issue. Now, the thing is, how are you going to do the double entry now? Look this example. Share capital 100 and the reserves 400. Now, dividends paid to shareholders based on this number or this number? 100. Dividends paid to shareholders based on the share capital, not on the total equity. This we call it total equity. This is share capital. Now, when the shareholder is seeing this, we have 500 equity and our share capital is 100 and we have a big amount of reserves. But I am receiving dividends, very small amount based on this. It's unfair. So the shareholders are made sometime what they do, they will sell their shares. Because they are not happy with the way the dividends are paid. So one strategy the company is following, what the company is following is, see, they will transfer some of the reserves to, let's say, they are removing 150 and they are giving 150. What is the net movement here? Net movement is 0, no? But how much is the share capital now? 250. Reserves? So this is before and this is after. Total is still 5. So in a bonus issue, we capitalize the reserves and transfer that to the shareholder without taking or paying any cash or any without changes to our net benefit. So capitalizing the reserves to share capital without any changes to net wealth. This is what the bonus issue is. Advantages. Bonus issue can be made from the share premium account. That's one example of the reserve, which has few other uses. Will allow the share price to fall without disadvantaging shareholder. Obviously, the total net wealth won't change, but when the number of shares in issue is increasing, the supply in the shares more. So the demand will be less, so the prices can come down. To make the company's share more affordable to new investors, then new investors can come easily. Shareholders will now own more shares and could sell part of their holding. See, before the number of shares 100, now number of shares 250. So even they sell 125, that means still 125 is in their hands. Clear? What is the disadvantage? The rationale for bonus issue is not always understood by shareholders. Rationale means justification. What is the justification behind this? People will not understand this.
If you try to explain that these are the benefits for you, you will not understand.
Exactly. Now can we try this question now, please?
Zoom.
I will do it. What is important here?
1 to 4 basis.
company has how many number of shares?
300,000 shares.
300,000 shares. So how many number of shares they will issue bonus?
75,000.
$75,000 into
Into 0.50.
point dollar value?
So 37,000.
Correct.
The double entry they asked me.
Yeah, that now. Oh, yeah. They are in the double entry.
We will take the 37,000 credit. So how much share premium balance, opening balance?
What do you have? Do you understand? First important point is what is the total dollar value in this transaction? You found that? What is the total dollar value in the transaction? This answer. How do you work it out? You understood that?
Yeah.
Okay. Now, there is a double entry. What's the double entry for that?
So that's why I'm
Share capital is increasing.
The share capital will increase and share premium will decrease. So,
it's the share premium.
You can do that.
okay. This is the share capital value given in the question. And they say each share is 50 cents. First step, calculate the number of shares. How much you get? Total number of shares of the company. Now, what is the arrangement for bonuses? When I have 4 shares, I will receive 1 for free. So bonus arrangement. We call it, how you read this, 4:1. Every time I have 4 shares in my hand, I am going to get additional 1 share for free. So how much total shares I have? So number of bonus shares will be 7,000 divided by 4. Understood this? So what is the total number of shares we will receive as free? 70. Remember, this is number of shares. Now I need the dollar value of this. 1 share, what is my par value?
0.15.
So 75,000 into 0.5. You get how much? 37,500 dollars. Now the next step is how we capitalize this or how we do the double entry. When I say issuing bonus shares, meaning my share capital should increase. Share capital normally a debit item or a credit item? Credit item. And for this to increase, I should credit the share capital or debit the share capital? Credit the share capital. And from where I should take this? They are saying we should take this from share premium. So the share premium already a debit item or a credit item? Credit item. And if I will take something from that, the share premium amount will increase or decrease? Decrease. So I should debit to share premium account and credit to share capital account. So double entry will be Is that clear? Yes, sir, clear? Now, we need to prepare the revised financial statement. Share capital. Already I have 150,000. Now, 37,500. 187,500. Share premium. Already I have 60,000. Now I have taken 37,500 minus. So 30, 60, 30, 22,000. Third is return earnings. How much already? 200. And no change. 400. This you don't need to show it, yeah? This is not part of the requirement. This I have just written. So you understand. 150 plus 60 plus 200 must be 400. Okay. Clear? Atif? Now, yes sir?
Please just write activity number and which one.
Alas.
Activity 2, 330 page.
$300? Clear?
So basically bonus issue in the sense that the management, company management is giving some bonus to the shareholders.
Exactly. It arises from the annual general meeting. They decide, okay, we will reduce or distribute the reserves as shares. Next is rights issue. Conditions. It is a cash issue. It's not for free. So bonus issue is free, right issue. Second condition should be to existing shareholders. You can't right issue to outsiders. But fresh issue, you can issue to outsiders. Third condition, price should be you understand this or not?
MP means what?
Market price.
Market price.
MP tell us.
What?
Market price. The price that you get it in the market. This is market price.
Price greater than right. Price greater than
The right price should be less than market price and more than par value. If you are issuing right issue to existing shareholders, the price that you're going to ask them, let's say for example the market price 15, par value 10. The right issue price must be between this 12, 13, 14.5, anything. But it can't be 15 and it can't be.
So then automatically premium will apply.
Depends, yes. Premium will anyway come. Yes. So now the double entry will be.
But in here, so what is the advantage? When you issue
The advantage is to encourage the existing, to ensure the total ownership is not getting diluted. See, we are here 6 shareholders, every one of us has 1 share. But we want to issue another 3 shares. This 3 share we can issue to new 3 shareholders. Then the ownership dilution gets even spread. But the same 3 shares, we get half, 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 half and half. So, number of shares will be 9, but number of shareholders will be still 6. That's the objective. So, double entry, debit, cash, credit, share capital, credit, share. That's what we have advantages as well as disadvantages. More cost-effective way for the company to raise finance than a fresh issue to the public. More time-efficient way to issue shares because already we have people. If all rights are taken up, shareholders will maintain their existing percentage shareholding. As shares offered at below market value, shares are more likely to buy them. Yes. Disadvantage: lack of shareholder interest may reflect badly on the company. If the shareholders don't want to buy this, still the company needs money, then they will be in trouble. Unwelcome predators may try to acquire shares where not all rights are taken up. Like say for example, I'm not buying, then the company still want money. So then what they can do is they will try to find an outsider. That outsider could be a predator like enemy. In Sri Lanka, there are 2 banks, Sampat Bank and International Bank. Same like here, Commercial Bank and Goa Bank. Now the International Bank, what they try to do, they try to become the 100% owned shareholder for Sampat Bank. What they did, when the Sampat Bank went on for a share issue. So at that time, the HNB tried to get all the shares by the HNB company. For that, they assigned proxies. Sampat Bank will not know that this is for HNB, but HNB has hired like 1,000 people, paid money to go and buy the shares. So, additionally, in fact, Central Bank of Sri Lanka found this and then they stopped that. But if that would have happened, the real competition between HNB and Sampat Bank won, isn't it? So, the predator, an enemy, can walk into our company. Effect on future dividend policy: as company will have issued more shares under the right issue than it would have under a fresh issue to the public. So there will be a problem in the dividends. Will cause the share price to fall as shares are issued at a below market value. Can you try this question now? It's a continuation from the previous example. Huh? Already they gave here, you see.
This is 1.5.
Where is it?
So in here that power value is 0.5 still is given. No?
Yeah. Every idea, okay. Answer the follow highway. Okay, sorry. Okay, go ahead. How much cash? Okay. And then, and the level for share capital and share premium?
So when the share capital goes up, that benefit.
How much? This is you have taken 1.5 now. So share capital should be based on what price per share? Then okay. And share premium will be share premium. This is what?
The share capital.
Okay, so here this you found 104 something.
Yeah.
And this is
Paisa.
so then what should be this? This is also another shortcut. Here this is 1.5 and this is 0.5. So what is the difference between these two? 1. And how many shares will multiply? So it should be 7. How about this? How about that?
ना फिर जनरेशन का अभी ज़्यादा होगा
ज़्यादा?
understand मैं क्योंकि यानी ये तो क्लास सुनवाई reading not explain यानी reading only أنا तो totally this is my problem when I start this course
You understood or not?
This one, first one, will see the number of shares.
Correct. How to calculate that? Then?
And this will divide by 5.
Very good. Why you divide that by 5? No. The one that you calculated now. 187,500. You calculated this now. This is what you call. What is the name for this?
This number of shareholders.
Okay, now I need the right issue numbers. How many shares? What is the arrangement? This is the arrangement. So, what you should do?
Well,
By not this.
this
Ah,
one. Okay.
by how much? By what number you will divide?
By or divide?
Same meaning.
5.
Yes. So, total new shares number. Ah,
But here in this exam, you divide by this number.
so, same thing. And divide by that number.
Yes.
See, 150,000. You divide by 0.5. You get
Okay,
300,000.
Okay, this
Okay.
is the number.
Yeah, that's the number of shares. And then we get 1 to 4.
Mm.
So I will do that question. Okay. 150,000 divided by 0.5.
Okay.
300,000 divided by 4. 75,000. Now you find out one share how much? 0.5. Sharp.
Yes.
0.2.
Mm.
But
Okay.
even if you will do the same here, you will get the same answer.
Yes. Same.
You do this way or this way, you will get the same answer. But here you should not do like that. Why?
Mm.
Here I am receiving cash. Here I am receiving cash.
Okay.
Here I am receiving cash. So you have to be careful. So, 180
This number 12.
divided by 25. You get the number of shares. Then you have to see this equation. Divided by 1. Then you get the number of new shares. Now multiplied by this number. So that is the additional increase in shares. But for what price you are selling? You are selling to this price. Come. So 75,000 into 1.5. The total cash you are going to receive are. Again, share capital, how much? 75,000 into 0.5. That is 37,500. Total cash other share capital, the difference, FURG, what is the name you give?
The name.
See, any price more than the par value, the difference we named it share premium.
Okay. Yes.
So what is the, from this three what you get? Share premium. You have three items, you know.
This one.
Exactly, that's
This
one.
one.
That's the old number.
Yes.
Now we need additional, we are getting some additional money now.
Well, at this one.
Not this one, the FURG, the 112 minus 25. You can take the same number in a different way. 1.4 minus 0.5, another 1 into number of new shares, 0. And also you get. I will do it again in the board. Check it. You see browser again. Okay. Step by step. Huh? Activity number.
3.
The page number.
3.
333. Now, equation. Are you clear? When you will go for right issue, your equation is when you have 5 old shares, you will get 1 new share. This is the equation. Class clear? Okay. Then we need to, we know share capital in dollars, 187,500. Other old. Now, one they also told you share price. Log in, can we calculate Number of shares. How to do that? Nathan?
One
Okay.
divide 0.5.
Ah. You get what is the answer?
300,000
300. Ah, yes. Honest. This is called what?
Shares, all shares.
This is the existing number of. Now we know the equation. So we have to calculate how much is the new shares. What must I do, Yasir? Tell me.
We'll divide this
This means what? Which number?
3,025.
375,000 divide what? By what?
Divide 5.
5. Why 5? Because my equation like this. Suppose my equation is like this, for example. How will you?
Divided by 5 into 2.
Ah, you should know that. You should see this correctly and use your maths. Suppose if this is divided by this to 3, then this number will become 3. So that clarity must be there. Okay? So now
If this 2 to 3 to 5.
2 5. Like this, what you do, Habibi? You divide 375,000. You divide by 5 and then you multiply by 2. Actually, it's like this. 375,000 into 1 over 5. In this example, since this becomes 2, this will change to. Clear? Okay. So, okay, what is the answer then?
75,000.
75,000 what? Coconuts?
Shares.
Number of?
New shares.
Now, what is the right price?
1.5.
Do we know the right price? 1.5. Therefore, how much cash I will receive? 75,000 into 1.5. How much is that? 112,000. Now, so I will debit cash 112,000. Is that clear? Now we need to find out how much was share capital. No matter how many shares you issue, your par value of the share, will it change or will remain the same? Will remain the same. How much is that? 0.5. And how many new shares you are issuing? 31,500. So the next item, there's a difference. Or the farq meaning. The difference is you call it share premium. Sorry. Credit share premium. 1.5 minus 0.5 into 25,000. How much is that? This double entry, is that clear? Okay. Now after this issue, what will happen to the share capital now? Already I have 187,500. Now, how much? 37,000.
This for what?
Share capital.
Share capital?
Now, after the right issue. So how much is the total now? 2 to 5. Share premium. Already my share premium is 22,500. Now 75. So how much is that?
97.
And retained earnings, no change.
230 now. They give 230.
They have changed it because, brother, after 1 year, no,
Ah.
business, profit, and all that. So, 230.
This second one,
Adi?
I
Yes,
22.
500. That you can check in the book.
Yes.
Clear now?
Yes.
So that is activity number. And then you need to show all this, which I have done now.
1 minute, please. This kind of question will come.
Definitely going to come.
Okay. This box, what they are asking, they are this number in detail. How you arrive? What I wrote, this plus here. No.
This will change.
What I wrote,
In this case will
change. 230,000. New one. Retain earning 230,000.
Ask them how they can go.
This not change, but the total change.
Total change.
Total will change.
Change. Cash.
Cash coming now.
To 552.
Share capital. 50 cents ordinary shares. Number of shares.
Tomorrow 6 o'clock. Tomorrow 6 o'clock. Tomorrow Saturday.
Six?
6.
Like 187,500 plus in the 187,500 plus 30 over 100. The answer is